Hello and welcome, and thank you so much to everyone for joining us today. My name is Risa Eldon, and I'm the head of industry partnerships here at Houzz. Houzz, we just launched our Houzz Pro offering, which is an all-in-one solution that empowers home design and renovation professionals to stand out, win more clients, increase profits, get paid faster, and stay connected with their clients and teams. And today, I'm so honored to be joined by Emilie and Marissa of Logistis Accounting, where we will cover, planning for financial success during this time. Thank you so much, ladies, for joining us. And while everybody's getting started, I'm going to go ahead and give a little bit of a brief background about you both. And I know that you've brought a lot of really strong knowledge and expertise to our community. And we're just very thrilled to have you back with us today to kind of go through how to manage your business at this time, creating a business plan that focuses on growth, ways to avoid operating in the red, and kind of how to defer IRS and state sales tax payments. So let me tell you guys a little bit about Marissa and Emilie. Logistis specializes exclusively in accounting services for home design professionals. You hear architects, builders, designers, you name it, they understand your business. And as industry leaders in the QuickBooks and our business management tools integration, Logistis tailors to your specific needs for your business and your strategies and aligns with your trajectory to alleviate stressors that arise from self-managing your finances. We've all been there. And with Logistis on your team, you can really leave the numbers to them so that you can focus on making the world more beautiful through your designs and your home remodeling work. So without further ado, I'm going to pass it over to Emilie and Marissa, and thank you so much again for joining us today.
Yeah, thanks for having us. That was quite an intro you had there. My name is Marissa McKinney. As Risa mentioned, we're an accounting firm virtually servicing small to mid-sized companies. While our firm was one of the fortunate to be remote ready during this time, we have a lot of different clients in a lot of different industries, and we've had a chance to analyze firms' finances and where they're at across many sectors. And as all of you know, some businesses were doing really well, and some businesses are still doing really well, while others were hit really hard and really fast. We're in California, so we were one of the first states to get shut down. So we know a lot of designers and contractors and builders, architects have all had to deal with that pretty early in this crisis. And having been through a recession before, and having done a great deal of analysis currently, we know that no matter what type of business you are, or whether or not you've already been affected, we anticipate that everybody will be affected, and there are things that you should be doing right now. So I guess you could kind of say this is a little bit of my personal agenda to get my message out there to the world, that I don't necessarily think that all of your focuses should be on funding and temporary relief. I really think that businesses need to kind of shift their mindset and start thinking more strategically about how we're going to ride this out and how we're going to emerge stronger on the other side. So after all of these conversations that we've had with our clients and everything else, we know for sure the two things that every firm should be doing right now is, number one, monitor and conserve your cash. And the second is to come up with a plan to emerge strong after this crisis or this recession. So today we'll discuss how to do both of those things. And again, we just want to offer those solutions and be a resource and a tool for people that are going through this and firms that are going through this. I know there's been a lot of webinars out there that are covering these topics, but we want to actually kind of dive into the details about how to do some of this stuff. So we'll be going through that in this webinar. So we just want to remind everybody that we are only in month one of what could potentially be a very long road ahead of us. We stumbled across this Morgan Stanley research, and we wanted to present this graph in our slides because, again, we want to remind everybody that we are only in month one of a very long recessive stretch. And the obvious and unique challenge that we're presented with during this particular recession is that we were in both a health crisis and an economic crisis. These set of circumstances make it more difficult to predict market behavior. And one very plausible theory presented in this graph is that even if things do begin to go back to normal in the next couple months, will likely be a second wave of closures in the fall or the winter. So even if we have the best case V-shaped recession bounce back, there's still the possibility that we'll need to repeat the current social distancing structure that we have right now, and we need to plan for that, or plan for different contingencies and different trajectories for possibly how your firm is headed. So we'll go into different scenario planning and things like that. And we believe that the work that you're going to start doing today, and hopefully right after this webinar, will basically help you to take action to plan for all of those possible outcomes. So, Emilie, I think you can maybe start telling people how to go about this process.
Yeah, I think the most important thing to remember is that during this crisis, it's more important than ever to know your numbers. What we've really learned from experiencing the last recession is that firms who had accurate and current financials were better positioned to handle a downturn in the economy. We need to have a clear grasp. You need to have a clear grasp on your business finances and a plan of action depending on what direction your business will take during all this. As business owners, we always advise for you to anticipate the worst case scenario in order to survive the actual outcome. So what we've done is we've created an action plan for professionals to run a simple cash flow analysis without an expert. So these are things that you can do if you have all your finances in hand. You can gather, organize, and assess or measure through your burn rate. So we'll quickly go through these things. So it's kind of like a DIY version for yourself. So first, and before we dive into this, let me first say that you should have an accounting software set up to track your expenses and income. So if you're not using some sort of accounting software or system, now's the time, get everything set up, get your systems in place so you can better track these things. Communicate with your accounting team frequently. Do you have a bookkeeper, an accountant? Make sure you're constantly communicating with them and devising a plan and knowing that you have accurate financials. Also, you want to keep up with your financial record keeping. You cannot make any sound business choices or decisions without having your full financial story. So that is super, super important. So now let's go down into some of these things that we need to do. First, you need to gather all your finances. So to do a proper cash flow analysis, compile a list of all your reoccurring business expenses and all your monthly business costs. You want a list of everything all your costs that it takes to operate your business. Then you also want to run an AR report. If you're using Houzz Pro, whatever system you're using, pull that AR report, determine what income is currently outstanding and what you anticipate to receive. Run an AP report. What do you still owe to your vendors? What additional liabilities do you still have within your business? And then lastly, in the gathering step is your total amount of cash on hand, what savings, line of credit, what call to capital, etc. What cash is at the ready for you in case you need to use it. And then step 2,
Organize your findings, right?
And this is your part.
So once you've gathered all the information, then you can start to compile it in some sort of cash flow technology, whether it's a very basic Excel calculation, whether it's a template, whether it's an app, whether it's a software. There are lots of different options out there for what you can use. Emilie has developed a really great, very simple tool to sort of forecast your cash flow. This is a plug and play document. Again, you're gathering those finances, you're looking at your monthly gross sales, you're looking at your monthly cost of sales. You could even rough this out as a percentage with, if you have a set standard of markup, you know, your monthly operating expenses, your net income. And then if you want, if you think that your sales are probably going to be on a declining scale, you could just use the numbers that she's graphed out here to chart your linear timeline for your cash analysis. If you anticipate, you know, spikes or peaks or valleys, then you can adjust those numbers as you see fit. And you can just plug and play with this particular cash forecasting tool. So we have made this available for our clients to use. You guys can reach out to us and request this if you want another copy. You can adjust it to fit your business needs. You know, if you know that there's particular legislation in the pipeline that may open up some option for sales, or you guys are launching a new product or something like that, then you can, again, you can play with these numbers. And this is a very easy plug and play document, but there's a lot of great cash forecasting tools that connect to different various accounting softwares. So for a lot of our clients who already use these technologies that have great integrations, we're able to just plug in those numbers into a more complex modeling and provide those numbers for our clients, which has been really great. But it's really important to know these numbers. It's really important to establish a baseline, which we'll get into in a little bit, and to know where your levels are along this journey through the recession. So again, this is just one of the tools that you will have at your fingertips to utilize and to leverage as you're working through how to determine your cash position. And then after you're doing that, then you can jump into the burn rate and calculating that. So if you're on a declining scale, burn rate's important. So Emilie, do you want to walk us through the burn rate?
Yeah, and something we forgot to mention at the beginning as well is that you might have done all this gathering and analyzing your finances. You might have completed that work in week 1, but it's super important to periodically update this information and not just do the work and set it aside and be done, but looking at your progress and changing whatever calculations or whatever projection system you have in place to make sure that you're constantly aware of your financial standing to be able to kind of get through this downturn.
Thanks for bringing that up, because I feel like we all did this in week 1. So for a lot of people, this is like, yeah, that's old news. We already did this. But the point of us bringing this up again is that we think that people should be doing this again right now. And then for the longevity or the stretch, they should continually do this at least weekly. So if you haven't done it already, which I think most people should have or have done, we encourage people to do this every week. And especially right now. Right now is a great time to reanalyze, because we've all kind of settled into where we're at and people are getting a little more adjusted. So this is a great time to pick this back up and to do the work again.
Yeah, exactly. So now that you have all this information, you're kind of plugging it in, doing projections. You also need to determine how long your business can self-sustain with either your current cash reserves or any additional resources that you've brought in. So calculate your net cash burn by taking your revenue minusing your operating expenses to really know what your burn rate is and the rate at which your business is losing money. And then next slide. And then Marissa will go into 3-way forecasting.
So going back to monitoring those baselines. So again, I'm just going to repeat this. This is why it's so important to have that financial data at your hands on day 1. But if you haven't already done that, you know, now's the time. Get caught up on your finances. Get those numbers into your documents, and then start monitoring that baseline. You need to know at what point you're going to dip into your cash savings, when you're going to break even, and when you'll be operating in the red. And if you know when that's going to, or if you can potentially predict when that's going to happen, or even if it doesn't happen in the month that you think it's going to happen, you'll at least be better prepared to make decisions as you need to make them. And it's a good thought. It's good thought work and good practice to be thinking these things out and thinking them through. So I think we can jump down to the next slide, Emilie. Yeah, we just covered that. So your baseline, it's just a gauge of how, or you can set benchmarks, then you can gauge how effective. Oh, we're already at 2. Okay, how effective and improved there. Benchmarks. Better, worse scenario, and better, same, or worse scenarios. So I like, Emilie, you came up with these examples. So if you have a cash sales or service-based business, you may experience growth. It's giving some examples. Better experienced growth in monthly sales. The same case scenario would be like a plateaued monthly revenue. Worse would be declining sales. I have to say that if you're actually in the same scenario that you were before COVID, you are doing better than most of the firms out there. So congratulations on that, and keep that up. I do think if you're in the same position, the next couple months are a little bit risky and you need to pivot a little bit, but it's good. If you're in the same position and you're not in the declining sales or the worst position, you're still better off than a lot of firms out there. So just keep that in mind. And then this examples of status projects, like a good example of a better case scenario would be you have current projects that are not affected and business is carrying on as usual. The same would be that you have similar projects in the pipeline or their projects are still active. And then the worst is that business is completely halted. And I know that in San Francisco, a lot of the construction and contractors have been completely halted, and that's been really hard for business. So they're probably in that, the latter of the scenarios. And then again, if you want to jump into the next slide, Emilie.
Okay.
I think when you are able to measure out these metrics and determine your benchmark and baseline, then you can create an action plan for each of those different scenarios. So I'm operating in the same plateaued monthly revenue scenario right now. However, I know 2 months down the road, based on my declining sales scale, that I will, reach a net income of $50,000. And at that point, I will need to take very specific action of doing this, this, and this. So what you're going to be doing is when you're creating those 3 different scenario plans, you're going to be thinking through actions that you have to take when you hit those different thresholds. And this will also, it will take out of some of the emotion from the decision-making process, which I know it's hard to do. Us as firm owners know that that's very difficult, especially when you have a smaller team. Those are really hard decisions, but if you already have a game plan and you've already thought through a lot of this stuff, then you're able to make faster, more efficient decisions that will actually be better for everyone. So so coming up with these different scenario plans and having an action plan for each different scenario is going to be really beneficial for when you have to make decisions. There's a couple more examples. I'll let you guys read through those if you want.
I have a quick question for you ladies coming from the audience.
Yeah.
So in terms of, your action plan, what is the strategy accounting wise? Hang on to cash, keep credit balances and waive fees? Like what's the bet? What do you recommend?
I recommend cash is king right now. Okay. So hold on to cash if you can. This is going to be we said in the beginning, this is going to be a long process. So you need, the more time that you can buy right now, the better. So I like to think about it like that. If you're a visual person, which I'm sure the majority of you are out there, I think about it on like literally a board game and like a little roadmap, and I move my piece to where I need to be, and how long that road is, and just holding on to the cash that you can, because we need to get through a stretch. And then we're about to go into the second part, which is what you guys are going to be doing to take action right now. So while you're conserving cash, the next part is, making a plan for action. And what you're doing is you're just buying more time until you can really develop a solid plan to diversify or pivot or reassess your 2020 goals. Does that answer the question?
Yeah, and then there was a follow-up question that was, do you mean defer as much as possible?
We're going to get into tax deferrals down the road. So when you say defer as much as possible, it depends. Cash is king, but I think it's really more of a case-by-case business about the different types of deferrals you want to leverage, because you don't, you really need to focus on reopening, or, if you're in construction and you're halted right now, like, what are you going to do when we can start everything back up again? Am I going to have the funds to pay the contractors, or am I just spending all that money right now? So we really have to think and consider when we're discussing deferments. We have to think and consider what are reopening costs and be focused, laser focused on that, as opposed to what I need right now. Like, you have to think about this in a really long-term stretch. And deferments can get a little risky and a little scary if you're not thinking about how long this time may be. Again, we are in month 1. So yes, you could defer things. Yes, there is a certain level of deferment. And if you're guaranteed funds in the future, maybe there's a different action plan for you. But I would say be very careful about deferrals, even though cash is king.
And yeah, and what she was saying is credit card payments, loan payments, car payments. Those were.
Yeah. I mean, I say if you have to pay it, honestly, like, maybe you put that on your list of things that you just take care of right now. Unless, again, you have like some sort of 100% guarantee that there's a reason that you should be deferring these, because you're going to have this much capital down the road, because this is a long stretch and you want to conserve cash, but you don't want to put yourself in a worse off predicament when you reopen. Be careful.
Okay, great. She says thank you. All right, I'll let you guys continue.
So then the next step is, let me go into the next slide, is now reshaping 2020. So reshaping 2020 and creating a clear vision after everything that's currently happened. So I think we all started 2020 with a different outlook, but now having to adjust that outlook based on what's occurring to the economy. So we're not going to talk too much in depth in reshaping 2020, because I know a lot of Riza's other webinars discuss business goals and stuff like this. So we'll just briefly go through this topic. First off is completing a SWOT analysis and evaluating your business deeper. So this exercise will really help you determine what parts of your business might crack first and possible hidden opportunities. So we advise our clients, take a piece of paper, list out your strengths, weaknesses, opportunities, and threats, and really figuring out where you can grow your business, what threats or weaknesses you can turn into opportunities, and see if there's any different opportunities there. And then the next step, updating your 2020 goals. So while you might have already created your goals for the year, really getting in a pattern of updating those goals quarterly. This should always occur, not just when the economy kind of takes a dip, but always. Create obtainable, measurable goals based on the current climate, and then a roadmap to achieve those goals with smaller measurable tasks. So you'll have one larger goal and then your individual task to achieve that ultimate goal. And then adding calendar reminders to stay on track of those objectives, so that by the time you reach those milestones, despite everything going on, you can possibly still accomplish things.
Yeah, and we want to like shift people's focus to being more about what we're going to do and how we're going to, be stronger and come out stronger, and just getting creative, because that's what you guys probably do best. And just, these are just some great thought exercises to help you get in the mindset of where you need to go.
Yeah, and definitely. It kind of helps you look beyond the current climate and see the bigger picture and have a plan for when things do shift, that your business is geared up and ready to go. Because a lot of people are predicting that while things are a little bit slower now, that eventually right after this, business will be booming. So, and again, it depends on your industry. But the next step would be take this extra time to update your business plan or create a business plan if you don't have one. So now things, your vision, your business goals have shifted, shift your business plan accordingly, or at least update it. Maybe it's something you haven't touched in 2 years. Now is the time to kind of refreshen it, add a little bit more info. This will also be a great tool if you have to take on additional investors or funding options. So to have that business plan ready is wonderful. And then again, like we mentioned before, helps look at the bigger picture of things. And then Marissa, the hot topic, you want to jump into tax payments?
Yeah, the hot topic. We didn't even mention PPP in this webinar. I'm sure that's the hot topic, but other tax deferments. I think most people know that the money you owe to the IRS, you have until, July 15th to file and pay. As of right now, who knows if those timelines will get pushed back or not, but you don't even have to file an extension, that's automatic. One thing I want to discuss, because it comes up a lot with our clients, is, and maybe this ties back into the question too about deferment, do I defer sales tax? I feel like those are the things that you have to pay back, so just pay it. Again, unless you have a very special case scenario of circumstances where it may be different, I think that this is risky money to hold on to because it's not your money. You collected it on behalf of the state and you will need to pay it back no matter what. So go ahead and maybe just pay sales tax on time. And again, this isn't, tax advice. I'm not talking about individuals in particular. It's kind of a case-by-case scenario. I'm just giving you a very general opinion of what I feel about some of these deferments. And then payroll tax deferral. So for companies that did not receive SBA loans, either the IDA loan or the PPP, they can defer their tax payments for the remainder of 2020. If you did get a PPP, it's a little more complicated. But either way, payroll taxes are a pass-through tax. So this is, again, one of those very, very risky tax deferrals that I want to attach a big fat warning to, because these are things that you will have to pay back. So if you want to leverage those type of tax deferrals, you need to be very, very careful, and you need to have a really great accounting or financial advisor on your side. Let's see. And under the CARES Act, 50% of eligible taxes for deferral are going to be due, for payroll tax deferrals, are going to be due on December 31st, 2021, and then the remaining 50% on December 31st, 2022. And then the employee retention credit is actually something I'm pretty excited about. So if you haven't heard about that or really looked into it, this is the one that I would really want to watch for a lot of our clients. The program is intended for companies that have experienced major revenue drops due to the COVID crisis. The IRS website states that companies qualify for this credit under one of the two scenarios that I'm about to list. The first one is the employer's business is fully or partially suspended by the government order due to COVID during the calendar quarter. And then the second one is that the employer's gross receipts drop below 50% of the comparable quarter in 2019. Once the employer's gross receipts go above 80% of a comparable quarter in 2019, they no longer qualify. But we haven't quite worked through the calculations of the retention credits yet. But keep an eye on this. Put a calendar reminder somewhere to revisit this. And you'll want to try, and if your business is affected in one of those two ways, you'll really want to try and access this credit, because that's a big break for a lot of people. You're paying right now, but at the same time, you may get that giant credit. So that'll be really great for people to keep an eye on, and I'm a big fan of this one. And And as more legislation and guidance rolls out, I will have my eye on this one for sure and be hopefully guiding our clients through how to access this credit. Okay, I think that's it for tax deferring. Does anybody have any questions about that, Risa?
Going back over here, if you are an S Corp where payroll is not required, do you recommend pausing payroll and just do cash disbursements? This way you don't have to pay for payroll tax while we're on this crisis.
If you're talking about if you're talking about an owner's salary as an S Corp, if you don't have the money to pay yourself, don't pay yourself. Yeah, take a draw. If your business is at that same level, or if your business is running in the red, as an owner, you don't have to take that salary when your business is not making money. So, yeah.
And then what is your suggestion for funding for a single member LLC owner?
There's a couple things. I mean, it depends on your team size. We're about to actually get into funding on the next slide. But there's, yeah, again, it depends on your team size. If there's you could file for unemployment, you could actually apply as an LLC, you can apply for PPP if they get more funds. And you could apply for up to 100,000 for yourself if I think if your last year's tax returns can justify that amount and can back up that amount that you're paying yourself as an LLC. So you could leverage that potentially, or maybe try and go on unemployment if you're not able to work at all. That's the other thing that an LLC could do. But again, if you have more people on your team than just that, then there's other options you may want to look at. They didn't mention the team size, so I'm hoping that answered the question. And then
you find really quickly, sorry, you finished, but then after you're done, somebody had just asked if you could go back to the SWOT chart again.
Yeah, we'll go back. Let's talk about I think this is our last slide, right, Emily? Yeah.
Yeah, close to wrapping up.
Okay. So some other federal employer, it's out of money. Yeah, maybe it's out of money. We'll see today, huh? Okay, there are other places to look. Main Street Lending Program, Private Relief Program, state resources and local lenders. Chamber of Commerce had some programs, perhaps accessing an emergency bridge loan if you have other funding in the pipeline. PayPal working capital and business loans. QuickBooks had like a GoFundMe for small business running. Minority businesses, women-owned businesses. You could check out investment capital options. And then we also have, I think it was Gusto, one of our payroll partners, provided this giant list of federal funding. I mean, there's probably, I don't know, Emily, 300, but not federal funding, just different types of funding, maybe like 300 or more line items. And it's kind of separated, I think, by state, and they keep adding to it. I think it's a crowdsourced document. So that's a really cool one. It might be in our resources slide. If not, I think Reese is probably going to send out some additional resources. But again, it's a crowdsourced link. You could scan it for different funding options to see if maybe one applies for your particular area. And I think that's kind of it for the funding thing. Do you want to, let's see, let's jump down to, so yeah, these are some of our picks. So Houzz has a really great COVID landing page that they launched. That's been a really great resource and tool for us. Gusto's Hub has been a really great resource and tool for us. GitLab has a handbook that for firms that weren't remote before that need to transition to remote. I mean, this is like the most thorough handbook of how to get that done that we've found. Some really general coverage that we've been a fan of is this like Inc.com and U.S. Chamber of Commerce town hall meetings that they've launched. They put out content, like I think it's like an hour thing per week, but it kind of just gives a summary for everybody. And then Giraffe has been a great app for a cash flow forecasting tool for us, but Giraffe is a little bit more of a complicated modeling system. So again, we'll send out that tool for our forecasting tool if you guys want to use that. It's just easier plug and play. But if you guys really wanted to get deep into the cash flow analysis, that's a really great software. And then just on the recap note of what our discussion was about before we head back to that SWOT analysis, again, just knowing your numbers right now and monitoring them and watching your cash, planning ahead so you know, you can't really know where you're going unless you know where you are. So know where you are, know where you're going, create a game plan for how you foresee 2022 play out. And just remember, it's not too late to take action on some of this, even though we are a month into this. Remember, we're only a month into this. So there's still, it's a long road at that time. Okay, so maybe let's go back up to SWOT analysis, back by popular demand. If you went to business school, you probably saw this before. We didn't develop this at all. So this is like, I think it was developed in the 60s by like a Harvard, Stanford research. I can't remember. I remember what we learned in business school, but SWOTs, do your SWOTs and do your SWOTs.
And a lot of businesses will include this in a business plan in part of their marketing strategy and competitor analysis. But we found that it can also be a good tool for your business to figure out where you can take some threats or weaknesses and turn those into opportunities during this time.
Great. I didn't see any specific questions on this slide. I think she just wanted to see it, maybe take a screenshot. Just so everybody knows, this webinar will be recorded and we will be sending out a copy of the recording. So don't worry about that. Let me get to some of my questions. And Logistis is one of our exclusive partners, or you guys work exclusively with our clients, but somebody had asked what accounting software, and obviously you guys can speak to this, but do you recommend for a sole practitioner?
Yeah, I mean, we're QuickBooks diehards.
QuickBooks only.
Yeah, especially for this particular sector of the economy. It's a great hub for integrations. So it allows people to focus on what they do best. So like Houzz has a great, program called Ivy, which connects to QuickBooks. So QuickBooks is kind of like the central accounting hub, but then there are other softwares that branch out for that. And one of the reasons that we work exclusively with QuickBooks is because we love Ivy, and so they connect with that. So it's been really great for us. And then we connect our payroll companies and build some tech stack based on that as a central hub. It's also, they also have a sole proprietor, I think, version. So you guys could use that too. And
we have an exclusive partnership with QuickBooks as well, so you can get special pricing. Okay, going back up here, can you go to an early slide about timeline?
Timeline.
I don't remember which slide this was.
Oh, the Morgan Stanley research one?
Let's see.
Maybe like the slide 6, Emily? We're only in month 1. Okay. Yeah, I think Business Insider released this Morgan Stanley research. Unfortunately, it's a little blurry, but if you go do a search for this, for the Business Insider Morgan Stanley research COVID chart, you can look this up. And they put out a good good thoughtful research, Morgan Stanley. So I liked going off of this, but you will see that in the fall, winter, they do have a prediction that things will come back up, and then there'll be another wave. And I know a lot of people that I've talked to, a lot of colleagues and things, we all kind of believe the same thing, even though we're not necessarily medical professionals. So we really have no idea, but based on modeling and predictions, this is what we can think might happen. No crystal balls here. Just just be prepared that this is a possibility, so that when you're planning out your next 18 months financially speaking, then you can factor in this. So for example, if you wanted to tie in Emilie's forecasting template into this model, say you were doing maybe not a 30% decline, but maybe a 10% decline because all sales might slow down over the next few months. And then maybe you could do like a further decline in those particular months if you wanted to try some financial modeling to kind of mimic or mirror that Morgan Stanley research. That's a possibility.
And also we've been working with a lot of clients to plan to keep a little bit more cash reserve during that time period to help you in case your sales decline during that period.
Yeah. Yeah,
So
just some modeling where you're like, that there's particular months where you might have more cash, save that cash and spread it out over those hard months. So again, these forecasting tools are just key right now.
Somebody's asking if you guys have a sample form to collect up AP and AR info, a pre-made Excel spreadsheet.
Well, we use that in our accounting software. So I don't know. I mean,
or you could also pull these reports if you're using like a project management tool like Ivy.
Yeah.
But otherwise, you would just have to pull all your purchase orders or all your invoices.
Yeah, I don't know how else, like if you had a stack of paper, you would just get out your calculator. That's like the only other way that I could think of how you would do this. We wouldn't really have an Excel template or a spreadsheet about how to figure that out because it would just be basically adding them up. So, what do you have outstanding would just be a simple sum formation calculation.
Okay. And then let me go over here. Oh, I lost my other document. I have a question on the stimulus checks. I have an employee whose address has changed and he needs to know who to contact.
Sure. So IRS actually launched a version of their site or like a separate part in their irs.gov portal, whatever, that allows people to go in and put in their direct deposit information. So if you're waiting on that stimulus check, you can just Google IRS stimulus check or something like that. And I mean, I could probably just look up the link if you guys really want to.
Also, if you follow us on Instagram, one of our posts has the direct link where you can actually click on that link and figure out if your check's been deposited into your account. Because I have the situation, I had an old bank, so I could tell that if you enter in your information, they'll let you know if your check has been deposited or if it's on its way, that kind of information.
Yeah, so the URL is kind of long, so I'm not going to go into the whole thing. Again, just Google IRS, stimulus check, whatever, and you can go to, you can click on that link and go to get my payment, and then you can put in all of your current information. And if you haven't filed your 2018 taxes for direct deposit, whether I think it connects for credits, but definitely for refunds. If you've gotten a refund in the last couple of years, then they should have your information on file directly to your bank. So you should just get that automatic deposit direct in your bank.
Okay, so I actually found the link. It's irs.gov /coronavirus /
economic -impact -payment. Yeah, I didn't want to say it because I don't want somebody to go to the wrong site and then accidentally click on the wrong button and it not be a secure site. So
thanks guys. Emilie, somebody's asking, can you go into the slide with the Houzz COVID landing page? They want to understand more about our landing page. So if you click into that link, it should pull up that page. It's at the end. Go ahead, click that link. Let's see if it goes into it. I might go out of present mode. So basically what this page is we have been hosting weekly webinars to go over all of this content and bring you the freshest content. So every week at 9:30 a.m. we have a webinar. And this kind of goes through that's where all of the recordings live. It goes through all of our editorial articles. We're partnering with industry experts from other designers, other home professionals to get the latest information on what's happening where they are. It has all of our resources. It has a little bit of information about our upcoming events. Of course, all of our events are online. We have a weekly standing pro happy hour at 5 p.m. PST. The link is there. We have our virtual design market. I hope you guys can all attend starting on Friday. That link is there as well. It's kind of 3 to 4 days of really inspiring information to kind of help you stay up to date with your business, help you kind of prepare for what's next. So this is kind of where we've created everything to live. If you have questions, you can always email me. But yeah, that is what that page is. And then going back to Emilie and Marissa, a question for you guys about the PPP and for PPP forgiveness. Again, we did go over the PPP in a lot of depth up 2 weeks. Was that 2 weeks ago, I think? And again, every day things are changing. And we didn't want to make this whole session about the PPP. Again, we wanted to kind of give you other sources, other information. But here's a question. For PPP forgiveness, the requirement of 75% to go to payroll, that includes owner payroll. Is that correct?
Depending on the type of entity you are, I believe that would be a correct statement. And I would be very, very careful with, I mean, one thing that we are kind of preaching is be very, very careful with how this money is spent. It's not just a straight 75% payroll. You really need to get somebody on your team that's helping you with these calculations if you received the loan. We have a couple different documents that we're tracking the PPP loan for our clients. And these documents and these templates that we've created with the calculations are 7 tabs long. So don't just automatically assume that this is an easy one-step calculation, boom, 75%. You have to calculate your FTEs, you have to calculate, using your favorable denominator, you have to calculate, taking out the federal taxes, you have to calculate salaries over 100,000. So, you have to calculate part-time. Like it's not a really simple, like, oh, I have 75% of my payroll covered. It's not like that. So get a tax person on your side to help you with this. Most accountants have been working their butts off to try and get that taken care of.
And then as Marissa and Emilie mentioned, we do have a very strong partnership with QuickBooks. We do offer special pricing if you are one of our members that uses our business management software. So definitely feel free to email me if you want to learn more about that. Let me just go through it. I think I covered most of everybody's questions. Got that. Did I ask this question? Is this, when you guys were talking about employee retention, is this employee retention different than PPP and how? Did I ask that question?
No. I don't know where we were talking about employee retention.
Here, deferring tax payments.
Tax credit. Yeah, so there actually hasn't, people have been so focused on PPP that I personally have not ventured into a ton of the details about how this tax credit will be applied, nor do I think a lot of people have. We've all been focused on like the urgent, which is the PPP. Because people are getting money right now, so we need to get that taken care of, and then the credit will come towards the end of the year. So, so we haven't really been heavily focused on the calculations for that. But from what I've read on from the IRS site, it just talks about the conditions of your business being open, and it doesn't really talk about. Again, that I've read, and maybe I just haven't read through it enough. It doesn't really talk about the actual FTE retention being a part of that calculation. So again, just put a calendar reminder to follow up on this, maybe in a couple of weeks or a little bit further down the road to figure out exactly what the calculations are. And then, of course, if you haven't already subscribed to like our newsletters, we put out content on that type of stuff when we learn about it. You learn about it. All this stuff is very new. So unfortunately, I don't have the answers to everything, including exactly how the tax credit will be factored in.
Yep. And then somebody was asking about the AP and accounts receivable and accounts payable. If you guys are using our business management tools, somebody was just chiming in that's listening to the webinar, and she was texting me and she said, the project tracker report in Ivy, you can pull up those numbers. You can pull open POs and open invoices and pull that. And if anybody wants more information about our software, obviously you can always contact me. I'm happy to help. We're all trying to get this content to you guys as fast as we can and support you as best we can. And I just want to say thank you so much to Marissa and Emilie for really supporting our community during this time. I would say that the happy hours that we're doing on Thursday at 5 p.m. Pacific, 8 p.m. Eastern are a really awesome way to connect with the community and kind of learn what everybody else is doing to come up with new creative marketing ideas and just kind of get inspiration from other people and learn from other people. So that's what we're all about. If anybody has any questions, feel free. You can always reach out to us. We'll be sending out a recording of this webinar. We'll try to get you that forecasting tool as well. That's super useful. And I think, you know, as Emilie and Marissa said, if you were going to pick 5 things, I'm going to put you guys on the spot right now, that we can take away from this webinar and we can implement and like actionable steps, what are your 3 to 5 things that you would recommend?
Cash forecasting tool, whether it be a template, app, software, whatever.
Know your numbers.
Know your numbers, yeah. Developing a plan for 2020. Doing those thought exercises and leveraging all the tools and resources that are readily available at your fingertips. You know, whether it's funding or credits or whatever, and hook up with an advisor to make sure that you have all the up-to-date information as it rolls in, so you don't have to take on another full-time job of learning that stuff. But yeah, know your numbers, cash forecasting tool, considering your goals, leveraging tax credits, tax deferments, things like that, or funding. I don't know. I'm losing track of my fingers here. and like our topics for discussion are kind of the 5 things. That's why we chose them.
And exactly. And if people haven't applied yet for the PPP, obviously we don't know the situation, but if it is available, people can still apply for the PPP. Correct.
Yeah, people can. I mean, lots of banks are still taking applications, so that if it does open today or tomorrow, your application will be potentially in line. But there's already been talk about the fact that some of, you know, because there are applications sitting in the bank already, that they've already accounted for those funds too, and that they're already out, you know. So who knows, really, who knows what's going to come of that. It's a potential tool that you can try and use. Just be very careful and don't try and automatically think of it as being forgiven. I would say in your mind, you should definitely consider it a loan until the day it is forgiven. So don't make your business decisions based solely on the fact that this is free money, because that's not how that's working out for people.
That makes sense. That makes sense. Well, thank you so much, everyone. And I hope to see you all tomorrow at 5 p.m. and then Friday through next Wednesday at our virtual design market. And we'll be sure to send you out a recording. And thank you so much, Emilie and Marissa, for your time, your expertise. The audience also said this is one of the most beneficial webinars that they've attended. So thank you so much, guys. Really appreciate it.
Okay, good. Thanks.
See you guys later. Bye.